the final show of Trading Buddies for 2022. I get a little bit, hi Lewis, how you doing? I get a little bit nostalgic at this time of year. I hope that doesn't show through this broadcast, but yeah, it's kind of that time, isn't it? Yeah, long time no see as well, Lewis. Where have you been, mate? Around the place, I'm sure. Yeah, I tend to get into that frame of mind where you remember all sorts of things about what you did this year and what used to be and who's passed away and all those sorts of things, who you're missing and family members that won't be with you at Christmas and family members that will, all those sorts of things. No, not Bali. So, yeah, look, I'll try not to be nostalgic, right? I promise. We'll talk about trading instead. Oh, that's why we're here, right? Got it. Let me share my – I am sharing my screen. Am I sharing my screen? No, changed. Righto. A couple of orders in the market. Well, actually, one trade, one order. Let's get to the pound first, however. Gee, I could do with a winner, got to say. Got to do with a winner. Lewis will give me a winner. Double top, retrace, lower high off the daily pivot. Terrible candle, but yeah, suggesting downside, really, isn't it? What we've got as a range is high here. That's because that's the open of Tokyo. And current low just before London opens is this one here. So that's our range. Let me get it accurately. It's 123.76 on the downside. We'll change that. 123.76. And on the high side, we have got that one there, 124.26. I'm glad that's the case. Even numbers to work with. 124.26. There. What am I doing? I don't want that. No. Right on the monthly pivot, and it won't let me grab that. There we go. 124.26. Okay. Let me see. I probably need to let some people in the room. Guys, give me a tick. No? Okay. Small crowd today. Obviously, everyone's getting ready for Christmas, maybe. Okay, so they're the parameters, 123.76 to 124.26, 50 pips, right? So 50 pips divided by 2 is 25. Above 76 would be 01. 124.01. Look at that. Bang on the deadly pivot. Deadly pivot. Freudian slip, the daily pivot. Or just about. Righto. So if we are to enter the market, we enter the market long here. Oh, suicide, right? Anyway, let's do it short. Yeah, look, I think that's the way to go, Lewis, to be honest. But the system says we go long. So we go long. 124.01. Thank God we don't put much money on this, right? Yes, I agree. Absolutely, mate. The entry was probably here. Absolutely right. However, that's not what the system is saying, so we'll go against it. Look, I think the good part is this will just fall away and we won't even be taken in, but you never know. Righto, let's set it up and employ the trade manager. There we go. What are you all doing for Christmas, guys? Do you celebrate Christmas? Do you or do you not? And if you do, what are you doing? Whilst I'm fiddling around here. I don't think there's anyone in the room that's new today, so that's all good. We can know exactly what we're doing here at minimal risk. 124.01 is the entry. Stop loss is at 124.26. Oh, sorry, we're going long. 123.76, sorry. Take profit, we can work out that, what did I say it was? 25 pips. So 2.5 times 25 is 62.5, right? So let's go with 24.63. So that's 62 pips. And TP1 will be top of the range, 124.26. And we will remove 0, and we will move our stop loss to 0. TP2 we will disable, which is already done, to buy. As 100% agree with Lewis, this is a very, very, very good setup for a short, to be fair. The only one thing I would say, Lewis, is it's a tiny bar, and it is just before, well, I suppose it's actually, this is Europe Open, right? Belgium comes in at this time. So hasn't hit the daily pivot. That would be the one thing I would say. Resting and relaxing. What an excellent idea, Lewis. The one thing actually we'll describe, we'll have a little chat about this during the show, I'm sure, is what we do in the next what is it, 10, 12, maybe 15 days before we come back. 15 days of trading, I mean, before we come back. And hi, Joe Jewel. Planning to watch Avatar. Yeah, it's a new Avatar out today, right? That was kind of weird, that show. Avatar. But I enjoyed it. This is a new one, Aqua something, as I recall. Not sure what, but Aqua something. I'll watch it. Yep, absolutely. I'll also watching Yellowstone at the moment. And Cowboys. Kind of interesting. All right, let's get back to trading for a bit. Unless you want to talk about Christmas and what we're doing over Christmas, that's all good. I've got to bring in, I suppose, the fact that we've had the Fed overnight. There's been a massive week of news, obviously, and that continues today. There's more to come. Let me find the Forex factory. There we go. So we've had all this news to date. Today is Thursday, of course. This is a massive, massive day, headed up by the Fed, who predictably raised it at 0.50, and I guess the numbers force them to do that at the end of the day. There's a little bit of a hint that inflation is on the wane. If you believe that, you believe in Father Christmas, right? Not far away. But inflation's still there, right? It hasn't gone. It's maybe just a tick under what was expected. So interest rates still rising, cost of living still rising. Nothing really has changed. And the market didn't really change on the back of that either. So I guess we're back to where, and Ash is far more qualified to comment on this than I am. Where on earth are we coming into the end of the year? You know, what potential biases should we be taking into Christmas? Do we believe in Santa rallies? You know, is this the right climate for them? Is the seasonal bias exactly where it needs to be? Seems they're all lining up, to be fair. So it wouldn't surprise me in the least to see a mini Santa rally. I'm absolutely not there in terms of, hang on a sec, I think this is Ash trying to get into the room because the password has changed. We're 2 secs, guys. Okay, 2 secs. I'll give him the parameters. New login. all of these communication not devices, but software that we use is amazing. Same password. There you go. I should be able to get in. Sorry about that. I was talking about, where's your bias going to be? Are we going to trade? Do we have a long-term scenario? Do we have a short-term scenario? All those sorts of things. And I think that's very pertinent coming into the end of the year. What I do believe is the Fed's changed nothing at the end of the day. What they said was exactly as forecast. We'll go another 0.5%. What was interesting to me throughout the week were these numbers here, the inflation data, and 7.1%. And they're going, yippee, right? It's coming down. Really? 7.1% ain't great, got to say, when the target is what, 2%. So yeah, very, very difficult to think that that's great news. My bias, I've got to say, is to trade gold short. That's where I'm at, right? I'm at sticking with the gold short thesis. And, Lewis was just saying that pound is a perfect setup, and 100% agree with him. Today to go short, because we've got that. I mean, how can you miss that? It's a double top, right? And here is your lower high. Potentially, it's not set in concrete yet, but it looks pretty good, right? Now, have a look at this chart. What's different? What's different about that? Nothing. We're getting a beautiful bounce off this horizontal level, 1830. Well, underneath 1800 again. I can't trade this now, but on Monday, I reckon this is a short. We'll see. Lots can happen between now and then, and there's a lot of news to be transpired between now and. Anyway, that's my thesis. I'm looking. G'day, Phil. Phil's in the room. Good to have Phil in the room. We're going to talk about time by degrees, and we're going to talk about where we're at in that cycle. And I can't remember the name of that thing that's similar to time by degrees. Ash will be in the room in a minute, and he'll remind me, of course, what that is. Akhenaten or something. I don't know. It's like Fibonacci with a new name, but based on time on degree. And I'm all for it. Don't have a problem with it. Anyway, that's my thesis going forward. It's gold short, and I'm not trading it right now, as I said, but I reckon that's setting up absolutely fantastic for what we wanted to see, which was a pullback to the monthly pivot, or even a little bit lower, and then we can go along. So I'm a massive bear on gold, have been for a long, long time, as you know, and we'll see how that pans out. Now, in the market, what I have, and I can't believe it's not happening, but it's not happening at the moment. I'm short Euro Aussie, as my bias indicated on Monday. So there's no way I wanted not to pick up a short on Euro Aussie, and it did set up nicely on the daily chart, not off the current one because things have moved. But there, you can see a break. You can see a flush out, in my opinion, of the highs here. Come back underneath, retested, and entered there. We're still hanging in there, but price is just doing absolutely nothing. And I would suspect, because we've had such an incredible week of news and data events, that the market has simply gone sideways. On balance, I can't not hold this position because of what I've said repeatedly. I think we're at a massive resistance level, and I can't see this not retracing, at least, if not reversing. Big reversal here, double bottom again, and we're looking for a higher low. But the higher low, to my mind, has to come down here somewhere. And until that happens, I've got to be bearish, especially off this super resistance level. I did place an order on Euro Yen long today. Now, the yen didn't have a good day yesterday. The yen, how long since the yen has been in favour for more than a couple of days? I don't know, a long, long time. And like following, I guess, recent tradition, it had a decent day on Monday, SH1T day on Tuesday, mediocre day on Wednesday, and God knows what happens next. But that said, it did set up for me as a buy. Now, I hate to buy trading into resistance, but the clear case here for me is that we've gone into trend, and the trend is very, very clearly bullish. And for that reason, when I see a setup that suggests we go with trend, we go with trend. So I'm buying euro yen above this bar here, and I've got my stop loss below the weekly pivot. First take profit, as always for me, is at first resistance, which is here. And it's at that point that I'll put myself safe in the market and move my stop loss to just underneath the pivots. If you want to follow that one, the parameters are on the screen there. And really, that's all I've done this week. I've done absolutely nothing else except work my little puffer valve off. Ash.
Well done, mate. Glad to hear it.
I've been a very, very busy boy.
It's difficult, isn't it? This last lead up week to Christmas, because you kind of know that you want to be shutting down, but there's hectic things to do. There's so much to do just before you can do that, and you don't end up shutting down anyway because it's so manic. I think that's sort of the phase I'm in as well. It's just I'm looking forward to a break that's not going to be a break. So yeah. Almost better off with the equilibrium, really.
Astronarchi, thanks, Phil.
Astronarchi, yeah, you got the Astronarchi stuff going on.
So did we decide when that is?
Swee will know, and Swee's not in.
No, we've got a very small crew in today.
Well, I guess maybe they're all getting ready for Christmas. I don't know. What was it he said? I thought he said the 23rd of December.
I thought he said the 15th of December, which was
you might be
yesterday,
right, mate. Yeah, you might be right.
Oh, that's today, isn't it?
15th is today. Yeah, it's interesting because the market is moving today off Jerome Powell's speech and statement actually, and the Fed's statement, which was labelled as hawkish. I mean, it was a 0.5% rate hike, and the statement was labelled as hawkish, but he didn't really say anything different. It's just that he reiterated really what he'd said before, which is that they believe. In fact, I tell you where it became quite hawkish is when they started to count up the votes of what people thought would happen next year, and effectively what people was talking about, what the board.
By people, you mean the board?
The board, yeah,
Fed
the Fed.
board, yeah.
The actual Fed members. What they were basically stating was that they would be pushing for longer, and there was quite a few that voted for pushing for higher than expected, 5.5%. I think that they're talking about into next year. So, what Jerome Powell's tone was that they've been aggressive, and he said this as well. He's already said this. They've been aggressive, and now they will remain with their foot on the gas because inflation hasn't come down sufficiently, but they have got the opportunity to be less aggressive because they've done so much of the work on the front end. But they are way off the 2% target. I think they're talking about a 3.5% being the medium target rate now. So they're allowing themselves some room to maneuver. But they're still double that, they're at 7% now. I mean, we did see some CPI data coming a little bit weaker than expected, which pushed the dollar lower. But since Jerome Powell's come out, we're starting to see things like, as you said, gold coming down. And I am looking for gold further to come down further, along with everything else, the euro included. And I completely agree with you about the euro. I think the only reason that we're seeing the euro hang on so far today is because we've got a rate decision, and as soon as that rate decision's done, I wouldn't be surprised at all to see the euro sell off, relatively sufficiently. I'll show you some charts as well while we're talking about this. So
yeah, please do.
This is what we've been talking about with gold, and the things with gold is that it's playing out the way that both of us want it to play out. Well, I mean, I know you may not be wanting to pick it up down here, but I want to pick it up down here, and I wanted to pick it up
No,
down.
I do. I think, as I said last week, I've kind of changed my medium to long term outlook on gold.
Right. So we're on this.
I'm still short, but I think 1200 is now not on my radar.
That's good. So we are on the same page with it really, and it looks like. Let me just see how wide this head is. It's around about 40 sessions. That gives us around about 20. So that brings us to about here. So if we were to sort of put this on and give us some equal siding, so from one to the other, then that does still suggest that gold is the time to pick up gold is right at the end of this month, or early into next year. So I'm looking for a week of downside with gold before looking to start picking it up again. So it doesn't fit my measurements, if you like. If if the kind of Astronarchy stuff doesn't fit my measurements, so what I want to see is it dip down relatively far into what would then potentially look like a head and shoulders, initially, going to the downside. But
hang on, before you go any further, the Astronarchy would, because Phil's saying the 23rd is the seasonal date for gold. Phil, is that what you're saying? But the Astronarchy would work, because if it is today, then the market's turning. And that's exactly what it's predicting, right?
It is, but I think certainly the guy that was in the room was actually talking about it turning to a rally, not a dip.
Oh, okay.
But it's interesting you make that point, mate, because the first for half an hour of the evidence was about it turning, not about it turning into a positive move, but about it turning into about it turning. So yes, you're absolutely
right. It's a change of momentum.
A change of momentum, yeah. I think the weight is to the upside. It tends to change to the upside. But you're absolutely right, because what are we? Is this the new moon? Is today the new moon?
Oh, I don't know. My chooks are going nuts, so maybe it is.
Well, if your chooks are going nuts, then maybe that's maybe that's our signal.
Maybe
so what would it be? Chukanarchy. Let me just put that in and see if there's anything on Google. So new moon. Let me see. New moon date. Right, new moon date. Somebody else would probably be better looking at this than I am. 2020. It's gonna be 2021. That's pretty useful. Right, here we go. There's a new moon calendar here. Right, here we go. December. Oh, I can't read that. I can't read that, mate. I'm gonna say it's the 15th. I'm gonna say it was probably yesterday. I've just opened up a picture that I can't understand any of the I can't read any of the words. Okay, I'll hold on a minute. The next new moon, including the date and local times, was today, Monday the 12th of December. Next new moon, Friday the 23rd. 23rd.
Okay.
That was the.
Well, that's the seasonal date that Phil just said. Yes.
Well, do you know what? That might. Well, let's just have a look at the 23rd then.
Can you get down there that fast? Really?
Oh yeah, I don't see why not, mate. I mean, it's look at it now. If this particular bar holds, then we're looking at a $31 move to the downside. Similar gets us down, so in 2 days. So that could be Friday, and then it's only got another 2/3 to go on that. So it definitely could. It definitely could. So and we got a few days to get there. So 23rd. So let me just see what that would do with my measurements. If that's the 23rd, this does look like the middle of the head, I think, if I've measured this head correctly. Looks like the head could be 50 actually. Oh, it depends. It's just a bit messy in here to sort of like know what the head is. It might be 40, so 20.
It's the summer equinox too, isn't it?
Oh, is that right? Okay.
Is that what they call it, Phil? Phil's saying it's 90 degrees from the 23rd of September, which, as we know, 90 degrees, and 180 degrees from the 22nd of June, which is the shortest day, right? It can't be the longest day, though.
Shortest day.
Well,
for you guys. Yeah, for you guys. Yeah. Yeah, that might. Do you know what? The 23rd might just work out. It's not that far away from the middle of the left shoulder. So, so yeah, I think this whole zone here.
Yeah, I like it. Yeah.
Could actually work for me as well. So, 23rd, 24th, 25th, 26th. Oh, that's giving me every day. What day is the 23rd? The 23rd's a Friday. So actually it would work well for me if it then set up on the 26th, which is a Monday, because that would give it just a couple more days for that to work out. But we might actually get some kind of signal on the 23rd, and then we get the opportunity to try and buy it on the 26th. But I like it too, mate.
I think we've got the signal as of Monday. If the candle I'm looking at looks the same as it does on the weekly chart, that's the signal.
This one here?
The weekly candle. Yeah, the current weekly candle. Wow. Look at the high of that candle, that horizontal level on the high of the weekly candle, current weekly candle.
Yeah.
That's a great level.
It's a good level, yeah. I like it. I really do like it, and I'm going to give it a go. Do you know? So we were talking about $70. Look at this. $70 is on oil.
66.
66 was your price, but you remember I was saying that Jerome Powell, Biden had said that he would buy it at $70, and there's going to be buyers there.
Yep.
This is the $70 line here, and look what happens. Let's put it in exactly on 70, and I'll make it a different color so it's not confusing. Make it gold. There we go. Look at that, mate. And it's up 10%.
70.38. So yeah, okay.
Yeah, right on it. So and look, I mean, you look at it on a daily chart, it literally touched it by a pip and it was gone. By $1, if you like, and it was gone.
So Joe Biden is the new guide when to buy.
Well, Joe, I mean, I think not necessarily. I mean, certainly a guide at this particular stage, because he'd stated that, he'd stated that they were going to be buyers at $70 a barrel. Now, what needs to happen is this needs to filter into the actual volume of inventories. We need to see that inventories are getting built up, because if the inventories start to build in the United States, that will suggest that they were buying at $70. All we know right now is that the traders may well have reacted off that particular price. We don't know whether there was an actual buyer, a big buyer there at this stage. So we'll have to wait and see the inventory number, which I think is today. So let's see if their inventory started to build at that point. And if it was, that's going to be a big buy signal. If it wasn't,
it's already a strong momentum trade, isn't it? Really?
Yes, it is.
Those three bars are massive.
Is if it wasn't, if we don't see those inventories being built, and we get some proof that they weren't buying there, this may take one more dip and then get down to the 66. There's a chance we get down to the 66, and this whole zone then becomes the buy zone. But for right now, the evidence suggests that that investors are sort of following what the US government has said. So I think they would probably want to see the evidence that the US government did get, back involved at that particular price, rather than just speculating on it. Because, you go from 70 to 77, you've got 10% in a matter of a week. You're going to take profit unless you're really comfortable that this is going all the way back to, at least 90 before coming back again. So I think this is a really interesting play now. Oil becomes really interesting, and only a buying opportunity. Selling it now is out, in my opinion.
Despite the fact that it's at resistance, if I've got to say, if I got a double top or a reversal scenario,
then
a lower high, I'd sell it.
Yeah,
But
well, I think on the short term, I guess I'm talking about the long-term investors, rather than rather than us being able to sort of coming in and out the market within half an hour or so. Um,
sure.
so yeah, absolutely. No, I mean, that does need qualifying, but I think on a longer term basis, it would be it just looks like a buy now. It looks to me that anybody sort of like trading day over day or week over week is probably looking at this for further signals to push to the upside. And it might be that we get a really nice head and shoulders, inverted head and shoulders pattern here, and that's what people are going to want. So um, they get that, we get that, and we get back to this level, and then we start to move higher. That's going to look like a decent signal as well. So there, I guess the current price, if it breaks through and comes back, is an option. Coming back down here, we'd need to hear about the inventories, I think, and if that was confirmed, I think buying it would be the right thing to do at this particular
What's the
stage.
trend line saying, mate? Put the trend line. We're not there
Yeah, the
yet.
trend line. It's pretty steep, isn't it?
It is. Mm-hmm.
Almost. Oh, I'll tell you what. Let's tighten that up a bit. Yeah, I mean it's probably. I mean, this is where what you just talked about with a double top, that increases the chance of the double top, because eventually it's going to run into that trend line, isn't it? And these highs again, and these highs over here too. So certainly a level. I mean, it does look like a little signal for some downside on the short term for sure, under the daily pivots as well. But yeah, you could get the double top. That would suggest maybe tomorrow there could be a double top put in place that runs into this trend line, and then a push back down again.
If I was in front of the charts, which I won't be, I'd be looking at that. Absolutely would.
Yeah, yeah.
And I guess that leads us to at the end of hang on, I'll just have a quick check and see if pound's disappearing. That's all good. Leads us into, with the timing that we're talking about, add seasonal data and commitment of traders. Is the commitment of traders at this time of year waning in terms of are they really committed to trading? Let me put it that way. Let me use their own description.
Oh yeah, yeah.
Or are they going out on rest time?
Let's have a look.
Are they taking a holiday? In other words, if you look at the VIX at the moment, right?
Yeah.
The VIX is like, surprisingly for me, at this time of year, because we're expecting a Santa rally. I would have expected the VIX to be a little bit, and certainly the week that we've had, the VIX to be on the rise, but it's tumbling.
Yeah, I get what you're saying. So volatility is coming out of the market, and it has been. You're right. It has been just a slew of data which would suggest that the volatility's increased, but yeah, the brakes have been put on a little bit. Yeah, it's an interesting one, mate. Well, let's have a look and see, because the best way for us to tell that would be with open interest. And if we look along here, so these are the open interest. This is the open interest column, and this is the S&P. So open interest hasn't really come off that much. No, I mean, if you're looking at the start of the year, in fact, that was April, around about what do we got now? Yeah, there's still 3 million in there. So and that seems to be going back to October. A little bit of a dip, not much in the S&P. Looking at the Nasdaq. Yeah, less interest in the Nasdaq actually. You look at this one, 40. So here we got 413,000 contracts, and now we're down to 300,000. So yeah, quite a bit, and it has been actually edging lower. I don't know how clearly you guys can see that, but it has been edging lower. 332,000 down, down to 306,000. So yeah. These last few weeks have been the market has been coming off a little bit. Let's have a look at oil. Yeah, that's edging lower as well. Let's have a look at gold actually. Gold's open interest. little bit lower as well. It has, mate. Yeah, yeah. I mean, if you look at here, it's 741,000 contracts here, and we're down to 566 contracts, thousand contracts here, which is in the lower band. And this is actually this is last week's. This is the week before's data. So when we look at the data coming on Friday, we might see a dip again. So yeah, I mean, I hadn't really considered that, and that does kind of accentuate moves to a degree.
It kind of, the reason I ask is because everyone asks me at this time of year, what are you doing? You're going to close the charts up and have 2 weeks or 3 weeks off or whatever the case may be. And I say, well, it depends on what I'm seeing at the end of the day.
Yeah.
And I can't walk away from gold at the moment because I think gold is a great opportunity.
Yeah.
And
well,
I think the same could be said of, well, anything versus the US dollar, let's put it that way, because they're all going to be the same.
Yeah.
Yet you're going to have the likes of the gold traders sitting there waiting for, well, now the 23rd of December, they'll be sweating on this to buy it, right? No question, because it's a seasonal date. And we've just been through, Phil's told us the date and Astronautsi's told us the date, right? So we know there are going to be people absolutely sweating on buying gold at that day.
Yeah.
To sell into that sounds like a great opportunity to me.
Yeah.
And for that reason, I don't think I'll be trading on the 24th or 5th of December, frankly, but you never know. If there's a buy opportunity and the market tells me to buy, or the candles tell me to buy, then why not reverse that and go with the flow, go with the strength, I guess. The people who will be buying gold.
I think you make a really good point, because the whole thing about looking at markets is to understand that they all have nuance. And even though there might be a glut of traders that will be coming out of the market at a certain time of year, i.e. equity traders, really, during Christmas, there are another kind of sector and group that will be probably, as you say, sharpening their teeth, just kind of like getting ready to do their work for the year.
That's right.
Well
the whole year is dependent on what happens on those 2 or 3 days for some people.
Yes, absolutely right. Because if you're patient and you wait for those opportunities and those signals that have been historically stamped for you, then you can make really good money without having to sweat for the whole year, or having to look at charts for the whole year and all sorts of things. And there's likely sort of departments in the likes of JP Morgan that have to work through Christmas, and there's likely departments that are allowed the time off depending on what tends to happen, because inevitably the weather and I guess in this case we're talking about the what's going on in the cosmos, will affect or seem to affect anyway the movement of price for things. And if people are going to be at their desk, you've got to be ready for it. So if you're going to be one of those types of traders, so yeah, you may well be right, mate. And I guess that's the choice we make, isn't it? Because if we are going to be looking to trade gold, we've got to really join what everybody that is successful is doing, and we've got to trade over Christmas and maybe make people in our family a little bit unhappy. Or we say, do you know what, gold's just not our thing. We're just not going to. We can't trade it because we're not going to trade at certain times of year. We like the look of gold throughout, but we're not really sort of committed gold traders, which I think is okay as well.
No, but the whole point is there are committed gold traders, and they will be there. They'll turn up. There's no question they'll turn up.
Yeah.
We know they'll turn up because the seasonals are there every single year.
Yeah.
Talk about Santa rallies, whatever you like. But they're there. Well, they're waiting, sitting there waiting right now, sharpening their pencils just to trade gold long at that time. So the lack of, if you like, participants in the market, which is where I was going with all of this, can only benefit gold massively, because if they come into the market, they've got no opposition.
They've got little opposition. Yeah, that's true. Yeah, that is true. Well, and I guess we will potentially, see if that can play out. I think. Well, let's have a look at silver as well. And copper. We should probably check silver and copper. I think the interesting thing here is, I mean, look at this signal that's been provided here on the weekly for silver. That's also looking like.
Oh yeah,
it is good, isn't it? I mean, this and it would play right into the hands of those gold and silver bulls, because they any that have missed the move so far will be trying to get on board with it, or not even miss the move. Anybody that any of them that are timing the around about that 23rd, sometime around that week, they want it to come back. They can't have it continue to keep going, so they want it to come back. So this looks really good for a dip as well. I mean, and this is the interesting thing about the two of them, about gold and silver, and I presume silver will move as well. Where are we looking for silver to come to is the big question, isn't it? Maybe the monthly pivot as well.
Well, it'd be nice if it went down to 12 or something, that we could buy some more physical stuff. But
yeah, that would be good.
Nothing's going to happen.
That's a nice price there, mate. 21, around about the 21.25 level. Looks really good. The difference with this one and gold is that gold hasn't broken out of its inverted head and shoulders.
Indeed, yeah, I noticed that myself.
Yeah,
this one has.
This one has, which makes it a little bit trickier. But I guess if you're trying to find the bottom with gold, you're probably going to be pretty much on the same page as silver. Yeah,
it's asking a lot, but
there's a few trend lines you could draw here. You see, that might be an issue as well.
I think the thing that's interesting around all of this is that they didn't really jump back into the dollar after the Fed.
No, they didn't, mate. But I wonder whether that might be a little bit of patience.
Yeah, a bit of a delayed reaction, you think?
Yeah, I wonder whether it might be just waiting for the BO and the ECB before looking to come out. Lewis, is that the 1820? Is that on silver? So I've just seen. Oh, here we go. As your white line is also near the monthly pivot. US inventory plus 10 billion. Ah, there we go.
That'd be oil, right?
That's oil, yeah. So he's already telling me this. Maybe a build. 1820 on the weekly. 1820. God, that's a long way down, Lewis. Down here, you think? Do you? On the weekly. I don't know if it'll come down there. I mean, we've already seen that. I mean, that would be good. Don't get me wrong. I mean, it'd be lovely if it did come down there. I don't think we're doing that. I would be surprised if we broke this low. I'd be really surprised if we broke this low. So the monthly pivot looks good. This to me looks like the buy zone for silver, because if we were trading this as longer term investors, we wouldn't want to see it break this low either, because it does create a lower low. But this would still be in uptrend territory, even though it would be a significant move lower. This is still in uptrend territory on the weekly. So coming back to the monthly pivot, or in and around maybe 21.70 all the way down to 21, I think is attractive for silver, and I'll be looking at that. But it's got to come back, and it's got to come back in a timely fashion. The 23rd, I'm not having that embossed on my calendar. It wouldn't bother me if it's spilt into the following week. In actual fact, I'd prefer it, because it would meet my measurements a bit better. But I'll start looking on the 23rd.
I'd still be happy to sell into that next Monday, right?
Yeah,
I think that works.
Yeah, I mean, you could go short to go long. That's one of the lovely things about that, mate. If you could get a selling opportunity, and you could get a decent position on this, then you can have a really nice punt at that 23rd date if you can get the short on.
Absolutely.
With no risk. Yeah.
I'll see if I can sharpen my pencil for Monday, because I think
Yeah.
I think they're both good opportunities. And as I said, the one thing that does concern me a little bit, and you've explained why that may be the case, is that they didn't jump back into the dollar after the Fed.
I know what you mean. I mean, the thing is, this is the dollar index, and there was jostling. I think the thing is with it is that the statement was the headline was a hawkish statement, but it wasn't really. It was actually a little bit of both. They basically said we're keeping our foot on the gas, but they also did say that they were able to now ease the position, ease into those rate hikes. So maybe a 25%, a 25 basis point rate hike would be sufficient from here on in as they feel their way. And as long as the data continues to drop, then that's much more likely. So it was a if you like, a hawkish Fed, but it was shrouded with nuance and a little bit of confusion as well. And I still think that there's the really aggressive bearish moves that we've seen with the stock market and everything else. I think they're probably done. I don't think we're going to see anything majorly negative. We got the Nasdaq coming off a little bit. We might well see the lows again. But I don't think the Fed are going to drive the Nasdaq sufficiently lower over the course of the next few months from what they said yesterday. They would have to change stance. We'd have to see inflation, and this is where now the data becomes really important. We'd have to see inflation start to pop up again, I think. And then the fear kick in that the Fed are actually going to get more aggressive again. Because if that was to happen, then yes, we do see the Nasdaq, and this is still the price for me down here at 9,600. So the Fed would have to get aggressive to drive the Nasdaq lower, and we've still got this Ukrainian conflict. It's not like we're out of the woods with headwinds. We've still got lots of headwinds. We've got China opening back up again after having a zero COVID policy. Well, the reason that they had a zero COVID policy, to my mind, was because they were worried about COVID. So if they open up again, the chances that COVID all of a sudden starts to emerge aggressively again is pretty high. And then do they go, actually, we were wrong about opening up, we're locking down again. So are we in this kind of open up lockdown scenario over there? And if that was the case, again, Nasdaq's coming down. So there are a few sort of things out there. And again, it's if that was to happen, I mean, I don't know what that does to inflation. You've got a big country, a huge country that is going to start adding to the demand. As China come back, but by the same token, they are also suppliers because they produce so much of the world's manufacturing goods.
Yes, everything.
Yeah, so that Jerome Powell said it, and one may offset the other. So we might not see an inflationary a backlash from the fact that China are opening up, but if they continue to open and close, then things change again. So that's really what we're waiting for. I think as the world stands right now, with Jerome Powell saying we're kind of waiting and seeing, China's opening up, the war in Ukraine is just kind of doing its thing, then this price is probably going to stay in this range. But I doubt that's just going to be what was going to happen into next year. Something else is probably is either going to snap or get corrected. Maybe we get some sort of harmonization in Ukraine, and then all of a sudden everybody's kind of like back on again, and we can start buying up. But it's just
I think we've come to a contemplative point, and I think that's what you're saying. Yes. If you have a look at that chart, as soon as it started to come down, there was no hesitation. It just went straight down. Yeah. There was a retracement, and it went straight back down. There was another small retracement, and it didn't go as far. But now everything has changed.
Yeah.
Or something has changed, let me put it that way. And we've now got, 5 candles that mean nothing. Whereas previously, as soon as we got a reversal on those rallies, it just tanked, right? That's not the case this time.
No. Lewis is saying that there's already a big surge in cases in China as well. and I didn't know that. And it's this kind of thing, isn't it? It's this kind of thing that you just sort of look at it and you think, there's still problems for us to kind of navigate here. We can't just kind of flick the switch and go long in the Nasdaq. And the short is getting difficult because the powers that be are attempting to fix the issues, and they're a little way in now as well. It's not like they and I guess that's what you're saying, mate, because big move down, a little retracement, big move down. This is still in a kind of fixing stage. They were still sort of aggressively trying to fix. They were basically chasing their tail. Jerome Powell said, we went quickly at the start just so we don't have to go quickly towards the end. And I thought you didn't go quickly at the start at all, because you guys were saying it was transitory for at least a year.
A long time.
Yeah, they were talking about this transitory inflation, but they've kind of managed to paint it in a way that they've gone quickly because, relatively speaking, they went quickly, but they had to, and they had to because they'd messed it up at the start. The question really, when you look at the chart here, is do they have better control over the situation? And I guess that's what the chart is suggesting, that they've got a little bit more control over it. Here, they were out of control. It was just pump it up, pump up those interest rates, see if we can figure something out. But we have seen a leveling off of inflation. So they're looking like they've got a little bit more control now.
Yeah, but hang on a minute. Inflation's at what, 7.1%? Is that what the current print is? That's not
CPI,
good.
Yeah.
Right. That's not good. So okay, it's come down a percentage point or two, but it's still 7.1%, right? Not fantastic.
No, it's not. But I guess during this whole period, it was rising. That I guess that's what's happened. What we saw here was it was rising and they were reacting. It was rising and they were reacting. Same sort of thing here. Now it started to slow, and I guess that's the point. We're getting disinflation now. So because we are in that disinflation stage, then I guess that the assumption is the Fed won't do so much. And I guess what's happened yesterday was that Jerome Powell came and said, you know what, we're still on it. We might not be quite as aggressive, but we are still on it. And that makes the Nasdaq unattractive, and an unattractive prospect. It makes equities unattractive. So we can't 100%. Really go buying it. But we are in disinflation, mate. And if this got kind of, currently, this is the point, isn't it? We're currently in disinflation.
That's this month, yeah.
Yeah, that's this month. But things can change. So now, if this is to drop from 12 to, I guess it's near 10, isn't it? Yeah, I guess it's near 12,000 down to 10,000. Well, 10,000's there. 9.5. Just under. I mean, you'd probably want to do some Fibonacci with this as well, but and maybe some Elliott waves. I mean, if that's 1, 2, 3, 4, 5. I don't know how the Elliott waves chartists would count this, mate. But would they say that's leg 1, 2, 3, 4, and 5? Because that would suggest that we're about to turn.
Well, I'm not an Elliott wavers, but to my mind, there's been 3 phases. And when there's been 3 phases, there's going to be, in someone's theory, a change of momentum. Whether that actually turns into a different trend is another story, but there will be a change in momentum according to that theory. And I don't know whose theory it is, frankly. I think Phil, Elliott's. Who's in the room, it is Elliott wave, right?
Yeah.
I don't know. I've never studied it, so I don't know.
No, I haven't, mate. I did look at it briefly, but it made little sense to me. And I'm sure that there are Elliott wave theorists out there that are very successful and very good, but I've just never met one, and it just made it very difficult for me then to trust it.
Lewis, you must be making a fortune at the moment, mate. Look at the pound; it's just tanking.
There's the pound. What are we on? Hourly? Yeah.
Yeah, we said this from the outset. It was a great setup just to short this. Great setup.
Did you get the open?
No, we're long.
Oh, you're long on the pound.
The open says to go long.
Oh no, okay.
No trade, obviously. But
Yeah, it didn't set up. Yeah, pound's looking pretty dire, isn't it? Let's see what that might be driven by. Purely the Bank of England, and I guess this makes a lot of sense as well, mate, because what we've heard from the Bank of England all year is dovish statements. You know, raising interest rates, but we're kind of dovish on it. So where the Fed have come out and played a little bit of both, but may be mainly on the aggressive side, the Bank of England have been completely opposite. You know, they've so what we're likely to see is a 0.5% interest rate rise on the pound as well, but with a really dovish statement. You know, because that's just been the trend for them. So the pound coming down makes a lot of sense. Now let's have a look at the pound against some other currencies. Euro is pumping up against the pound, which doesn't really make much sense. But you know, their statement may well be a bit more hawkish, so that might justify that. Let's have a look at it against the Aussie, because this is the one that I like the most, the pound Aussie, because well, firstly, we're at a resistance point on the pound Aussie.
how long before that number's out, by the way? It's 3 hours.
3 hours time, mate. Yeah, I don't know where that line might well be. We're not quite there yet, but we've certainly got some. We've got some numbers over here. So we're at a decent resistance area on the pound Aussie. Last week's bar is really indicative of downside. We've got an economy in Australia that is just bubbling along. You know, we sort of like the numbers from Australia continue to be relatively good. We've got a region which has got their major partner in China opening up. So, you know, again, sort of
we discussed this. Yeah, these are on Monday or last week.
And then you've got the pound on the other side of it, which is you know predicted to be the slowest growing G7 economy. Even though those GDP figures that came out a few days ago were quite surprising. You know, I looked at those and I thought, okay, maybe Rishi Sunak and the like are actually doing an okay job here. But I think people are just waiting for those numbers to actually bite again, you know, come back and bite them. Because it was a shock, you know, to see those GDP numbers coming up, because the rest of the figures aren't particularly good. So we've got I don't know if you've got strikes over there, but we've got strikes out over in the UK right now. People are complaining about wages.
Yep. Of course, we're in a high inflation period. Of course, you're going to get people striking about wages. That's what.
Yeah. Have you? But we've got winter as well, so we've got energy crisis over here as well. So there's a lot kind of going on in this particular part of the world, which would suggest to me that the pound Aussie is a decent short. Now, if you are looking for a signal, maybe you don't have it on the 4 hour, maybe we don't have it on the hourly, maybe we don't yet have it on the 15. It doesn't look great on the 5 either, but you know, it's getting to the point where this one I would have thought this one should be right at the top of the watch list.
Well, Euro Aussie, it was Euro Aussie for me, and that's what I'm trading at the moment. That's in drawdown. Euro's rallying against the Aussie, but I can't imagine why. As you said, ECB maybe. We'll see what happens after that. But yeah, I'm on board with that as well, because it makes perfect sense. It's logical.
Yeah, the ECB. Do you know what? They're a tricky one to call, aren't they? The ECB, because you know, they've been hyper slow. They've been out of all the kind of major central banks. They've been the slowest to react. Which and also kind of like, you know, churning out the kind of really dovish rhetoric as well. You know, it wasn't just everybody else was moving and they were like, no, it's all good, but we'll be absolutely fine over here. And they were in the eye of the needle, the eye of the storm as well, because they were buying most of the energy from Russia. So the ECB then sort of like having to pretty much turn on a sixpence and go in completely the opposite direction and get kind of aggressive. But that's not really their stance. You know, if that was their stance, they would have done it from the get-go, and they didn't. So I wonder when we get back to form really with the ECB. And as soon as we do get back to form, and they sort of like say, we're feeling our way, or something of the like, then I think the euro just tanks. I also think it's come a long way on an economy which is weak. That they are in trouble in Europe, in the eurozone, and
I mean, it was always going to rally off parity, right? We understand that,
yeah.
and maybe that little honeymoon period is about to come to an end.
Yeah, I would have thought so, mate. I would have thought so. It's so difficult to tell with the euro. The euro is the hardest currency to pick.
Yeah, it's so resilient, isn't it? Under
Yeah,
all sorts of fire, it just keeps rebounding for whatever reason.
Yeah, it keeps coming back, and either eventually the too big to fail will bite it, and it will fail, or it's too big to fail. It's difficult to know. It's difficult to know.
Put that on the monthly chart, and you'll see a very, very good. Maybe you won't. The dollar index looks so clear to me that it's now in a sell. Euro dollar is now in a sell zone. Yeah, there it is.
Yeah,
that's the dollar index, right?
Yeah,
that's buying potential right there.
I agree. Needs to see the close of the month looking good. Close of the week, if the close of the week can start looking good. But you're absolutely right, mate. I mean, just without any kind of fundamentals, it does potentially have a little bit further to go. But it is that zone. I think that's the point here. We're in that zone where it could turn here. It could be a little bit lower, but we're getting close to the euro, to the turning point. And it just depends on where. No, you can't tighten that trend line up. Actually, it looks like that. It could be even this price, but maybe just not yet. It might just bubble along a little bit before it does start to move. But I'd be looking really for the end of this week, but really the end of today to give us a clear understanding of which of the euro and the dollar is going to be the strongest, and it's going to come from the ECB. What happens at the ECB. But if this dollar index does give us a positive sign on the weekly, that is probably going to take us into the end of the year, I would have thought, because there's nothing else. There's not really sort of too much in the way of data, which is going to change what investors are going to be left with after today.
Well, I think it's the same chart as gold, right? If you buy that up to, I assume that red pivot is your monthly pivot, or even a little bit above, it's going to give you head and shoulders.
Yes, it is. Yeah, you're absolutely right. Yeah.
So it's an inverted chart of gold, as you would expect, right, against the dollar.
Yes.
So everything's saying the same thing to me. It's buy the dollar. And I mean, I shudder when I say that because I think the dollar is just junk eventually.
Yeah.
But in the meantime, while the Fed keeps raising interest rates, then the dollar's going to appreciate. So, yeah, that's what I see.
Yeah. I think you're right. I think that there is that chance that could happen. Now, of course, it could, which would probably be a little bit cleaner. It could actually come down here and give us that as the kind of base instead. And the reason I say that might be a bit clean is that this line, it looks good over here, but it just doesn't look good in this area here. Not quite as good in this area here. But either really, I think this whole area really sort of like becomes like an area to start looking to buy the dollar up. And yeah, I'd be with you on this. This monthly pivot probably won't exist, obviously, at that point, but it's still going to go in line with this area over here. So yeah, either way, mate, I'm with you. I think that we're looking at 108.50 or something like that on the dollar. We're currently at 104.25. So maybe a 3 or 4% move to the upside is still on the cards. But I do think we've got to wait and see got to wait and hear what the ECB have got to say for themselves. And of course, the dollar index has also got some weight to the dollar yen as well, and the dollar yen has seen some move to the downside. And again, that doesn't look too bad here, does it? Either doesn't look too bad for a little move to the upside, and it looks the same. that really does look the same as the dollar index.
Yeah,
Seeing this
it does. But
come up
you
there
make me
and down.
you make me shiver when you put up a dollar yen chart.
Yeah.
I go into apoplexy.
Yeah.
It's just I cannot trade it. Never
No,
been able to trade it. I think I've won
no.
once on it.
Well, we were talking about this one on Monday, weren't we? The dollar yen, and it was all about this weekly pivot. That was the problem. It was in the way. I think this was when
Yeah,
Monday started. Now it burst through that and it tested it and it gave it, but it really didn't go anywhere.
and that's
You
been the
know?
week, and potentially the week was going to be like that because we had news from everywhere, all over the place.
Yeah,
There was
exactly.
data coming in left, right, and centre.
Yeah.
So it was either going to go you beauty in one direction, or it was just going to stay in all this mess. Really, at the
Yeah.
end of the day.
Yeah. Well, it's going somewhere now. That's one thing I would say. It's on its way back again.
Back up there.
Back up there and much more comfortable really trading this. I mean, look at that massive bar to the downside. He's just getting swallowed back up again. And it's probably going to end up somewhere around about here by the end of the day because there's nothing really with the yen. I mean, we got the euro, obviously, and we got the pound, but there's nothing with the yen. Now, interestingly, that may be why we are seeing the brakes kind of put on the fall in equity. So we're seeing this is the FTSE. This is the Nasdaq. Okay, I mean it has come down. It has come down, pretty aggressively as well. But I wonder whether we might be seeing a little bit of a pause in the downside until we hear from the ECB, just in case there's some, slightly more kind of dovish kind of language from the ECB, which would push equities back up again, possibly, or certainly get us into this zone here. So I'm not sure whether we're going to see an absolute. If you look at this on a daily, it's probably a bit clearer. Actually, it's a pretty aggressive looking bar so far. So yeah, I mean this could end up being down here, or maybe by the end of the day. But I wonder whether we are waiting on the ECB before we get any real kind of certainty on the overall movement of this. And I will bring the VIX up quite just at the end here.
Have you got your Q in the rack? You're not interested in trading today?
Well, no, I've actually got a euro dollar short on.
Okay.
Couple of positions on euro dollar shorts, and it's coming down at this particular stage. So I would have traded the FTSE, but I tell you what, mate, the problem with the FTSE was that when I opened the charts this morning, it was already here. It was there already. So this whole chunk had happened. Now I guess I could have taken it.
Look at that, little bits at a time, little bit more,
yeah.
little bit more.
Yeah.
How frustrating is that? That's horrible chart.
Exactly. and I would have sold it on the open, but because it's already done that, I just wasn't really that keen. So that's the only reason I haven't traded the FTSE. But if it does something, then maybe. But I think because I've got the euro dollar on, I'm quite happy just to hold on to that one. I'm trading the dollar anyway, and a FTSE and Nasdaq trade would still be trading the dollar long. But yeah, I have been tempted. I've been wondering whether I should take a Nasdaq FTSE spread trade with a Nasdaq as the short. But the price wasn't right.
At this very moment, you remember I said probably about 15 minutes ago, they didn't buy the dollar on the back of the Fed. They're doing it right now.
Exactly. Delayed reaction. Yeah. They're getting involved now, mate. Well, let's see if that continues and see what momentum that happens. I mean, but yeah, that was the trade. But even this was an hour before we started, and that's the problem. I look at these charts and I go, well, there was the setup. I'm not going to get involved now. The setup's, I've missed it. I got into euro dollar after the news yesterday, and I probably should have got into the Nasdaq as well, but I didn't for reasons that I can't quite explain to myself. Never mind anybody else.
I can explain why I didn't get into anything. I just haven't been in front of the charts. I've been as busy as a beaver building a dam.
Yeah.
Or as they say in Australia, flat out like a lizard drinking.
Flat out, like yeah. Well, if you can't trade, if you can't get in front, mate, you can't get in front, and we've got to make sure we get the right setups. Even though everything that we think is pointing in a direction, in my opinion, it was pointing lower, but I couldn't justify the price point to get in, so I skipped out of it this morning.
Lewis, your shout, mate. The pound continues to tank.
Yeah.
Yeah, awesome stuff. All right, should I close? Don't ask me. You're in the trade, mate. Oh, what a question.
Yeah.
What's your opinion, Ash?
What about closing the pound?
Yeah, look, it's going to give you a lower high at some stage.
I mean, you got to. I think you got to ask yourself what type of trader you are at this point, haven't you? If you're a short-term trader, you take your profit. But if you're somebody that looks for the longer-term move, this is fantastic, because if this weekly chart and this weekly bar ends up down here, this is coming down to the monthly pivot probably. So you've got a big move to the downside, but you've got to know which type of trader you are. I think I'd take profit because that's I'm a short-term dude, but Lloyd would be holding on to this. I guess that's the only way that you've got to look into yourself here, Lewis, I think, and say, what type of trader am I? I can't hold on to positions. I just have to get the money and move on. But other people can. But it does look to me like it's coming down here.
It certainly does. There's one other thing to consider, and I agree with 100% what you're saying. If you are trading this on a short-term basis, you're at DS2. And Lewis, you know what that means, right? DS2 means you don't enter a trade at that level. It also means, to me, that you must take profit at that level if you're trading on short-term. And if you're trading this bar here, same bar, the reversal bar that didn't hit the daily pivot, Ash, that one. Yeah, the tiny little bar, you're like 7 or 8 to 1 or something by now. Jesus, how much do you want?
Yeah.
That's
very
all
true.
I would say.
Yeah, well, this is it, mate. I mean, if you're a short-term trader, you get out here, you go back in when there's another opportunity. That's the way you trade it. Because if it does look like it's coming down here, you don't have to take that in. I can't remember the terminology, but it's you don't have to eat the whole meal in one mouthful. You can come in and out of this all the way down there. So there's different ways to trade it, but it is kind of knowing what type of trader you are. I'm with Jeff. I'd be out here. You're a Falcon. Well, you'd be out, and you should be out then, Lewis. Falcons are 1-1.
That's a basketball team, as far as I'm concerned. I don't know what a Falcon is. But you're at support. You're at support level. That's all I can say.
Yeah, true enough. Okay, mate.
Let's wrap it up. Let's go have a beer level.
I think we are, and well done, Lewis. Good close of the show there, mate. Good close of the year. For us, we're not back until I don't know what date, 2nd or 5th or something.
Oh, pass. I should have looked that up.
Well, I'll tell you. I
couldn't find my Santa hat either.
I think the 9th. Is
that the second Monday?
Yes.
Then that's when it will be. Yeah.
Okay. 9th of January. So everybody that's been in the room for the whole year, if you end up watching this video back, thank you so much for your company. We've had a great time. It's been a good year, hasn't it, Jeff? I've enjoyed it this year.
Right. It kind of, I suppose, puts a rubber stamp on why we did in the first place.
Yeah.
Because I enjoy sharing the ideas of yourself, myself, and other people in the room. It's great when other people put forward their ideas, and when they say it's the 23rd of the month that we need to look at the moon phase, and then I think that's fantastic.
Yeah,
because it adds something else. It adds another dimension to your understanding of what's going on. And if that's bullshit, then you can treat it as bullshit. But I don't think it's bullshit at all. I think everything that everyone who's come into this room over the past 12 months has had some wonderful things to contribute, and I've really enjoyed it. And I look, to be fair, because I'm so busy at the moment with my business, if this show wasn't on, if I didn't have your contact on a Monday and a Thursday, I wouldn't even be looking at charts at this time of day, which is sad because that's where my passion. It's where my passion lies. But life circumstances are life circumstances, and the reason that this show is on was initially so we could do that. We could share ideas, and I wouldn't miss that for quids, frankly, because it keeps me focused.
Yeah, same, mate. Same, and it's been great having George as well. As our extra trading buddy, and Simon coming in. So it's been a really good year. I think I've really enjoyed it, and I hope everybody has grown as well. I certainly have, and I hope everybody's grown a bit this year. And we'll do it again next year, and we'll be even better for it by the end of next year.
You bet. No hangovers.
No hangovers. Yeah.
All right, mate. Thank you so much for the year. Really enjoyed it as always, and look forward to coming back in January when, as you say, we'll do it all again. And thanks to all you guys for being our trading buddies. I know there aren't too many in the room at the moment. If you do celebrate Christmas, I hope it's a wonderful one for you, and I hope the new year has some wonderful things ahead. And I look forward to seeing you in 2023.
Bye-bye.
Bye-bye. I was waiting for you. So now. See ya. Merry Christmas, everyone.